Okay, let's just get started. I wanted to go over like the absolute basics of trading today and just how to get set up to begin with. And of course, the first thing you need to do any kind of trading is a charting tool. Like TradingView is the one we use, or the industry standard, if you will. This is where you'll have all your indicators and all your candles. You can set up watch lists, of course. So you can. This is where we chart all our tradable assets from Bitcoin to gold to stocks, etc., etc. Right? And the only other thing you really need is an exchange, right? So this would be for crypto. You have your stuff like Bybit. I would usually recommend Binance, but they've got a lawsuit coming their way. So right now, being very careful around them. And on the stock side, this might be your Webull, your interactive brokers, right? Whatever floats your boat, to actually execute the trades. But the reason we use something like TradingView rather than just using the charts on stuff like Webull or on Bybit or Binance, you will have your own. You will have charts on the websites as well, like on the exchanges. But they generally don't offer the same feature set. So you can set alerts in TradingView. So if you have a certain strategy or you're looking for certain levels to be hit, you can just create an alert here. Say BTC crossing 28,000, for example. It'll give me an alert on my phone or my email, whatever, and tell me that that's happening. And this gives us access to a big range of indicators that we can use in the future when we get around to those. So it's just good to be familiar with TradingView and to have that as your base charting tool. Yeah, this leads us into our first concept, I guess, of trading, and that is candles, right? So on every chart, it'll probably look a bit different for you. Let me reset these a bit. But on any chart, you will find these candles, and basically each one of these represents a single. Each one of these bars represents a single tick of your time frame. So right now you can see I'm on the D here on the daily time frame. I selected 1 day. So each one of these will represent 1 day of price action. So this will open, I think, at 0 UTC or whatever, or close, and then it creates a new one. And you'll see we have what we call the body. So we have a thick part, right? We got a thick part on there. It's the greatest painting tool. And then we'll have these little lines often on the top and the bottom side. So we got our body, and these little lines at the top are what we call wicks, right? And essentially the body is wherever price opens. So if we got a green candle, or in this case they're purple because I'm fancy like that, price will open down here, right? This would be the opening price, and I'll make that green. So this is where the candle started. And as price moves around, right, if price moves up from here, right, we will get a green candle, right, as price moves up. But what you can see happening is that price will actually move up during the time span of that candle more than where it closes. So we could have this essentially trade all the way up to the top here, but during the same candle it can come down. So within 1 day, in this example, we could go start down here, trade all the way up, but eventually close the day right here at the top of that body, right? So that's how you get these little wicks on the top side, right? So this is basically where price has traded, but it didn't close. Now the inverse would be if we open our candle here and now we trade down, right? This one closed. So now we open our candle at the top because this is where our closure was. So if price opens low and closes higher, it'll be a green candle, right? If it closes and then opens and then closes lower, so like in this case, it'll be red, right? And we can have in that same candle, right? We can have moves that come up, but then within that same period, it can come down and we see that move back down. But yeah, we can see these wicks, you know, they're on both sides of these candles. So you'll usually see these appearing on either side, and we can get a lot of info, I guess, or biases by looking at how these candles form within the market. Yeah. So yeah, I hope that makes sense for everyone. So price will open if it ends that period higher, it'll be a green candle, right? Ends higher, it'll be a green candle. My God, I can't draw for shit. If price reaches a level but doesn't close or open there, it doesn't close there, then you get these wicks on either side. Yeah. And if it closes lower than it opens, you get red candles, right? That's the basic concept of it. And then that forms a chart like this. Now, one of these bars, like I said, in this case, it's a daily time frame, but we can use this on lower time frames as well. And the concepts all stay the same, right? So if I go to a 4 hour or a 1 hour, right, you'll see I get more and more of these bars. But the concept stays the same, right? So this is more traded data, but it all just fits inside. It's just how much time passes before each closure. So we can get a more zoomed in look the more the lower time frame we go. Now, what this will show us, right, is we'll have this. These candles will form and they'll make what we call trends, right? And essentially, a market will move in waves, right? And this is what we call market structure. So for the last year or so, we've been in a bear market or a downtrend. So prices have been falling across the board. And you can see it kind of just follows this stair-stepping pattern down. And this goes as well for the upside, right? So we get these big stair steps up. Now, it's very important to understand when we're playing charts, right? When we're taking any kind of trades, we want to be with the trend, right? We want to take these, we want to look at these charts, and if we're making here, we're making a higher high and a higher low, right? So we put in a low here, right? This is our low. Let me just mark that off. This is a low, right? And now all we'll see is that we made a high here, and that was actually higher than the high we had back here, which makes this a higher high. And then we actually came down and we made another low, right? But this is now a lower low. And what does this tell us? This tells us that we're starting an uptrend, right? When you get a higher high and a higher low, that means you're essentially in an uptrend, and you can be looking for in essence, be looking for further upside from there, right? And it's the inverse for bear markets, right? We had a high, and we came down, and we made a lower low, and then we made a lower high, and again, lower low, lower high. You could call that a lower high as well, but yeah, just we keep making lower lows and lower highs, right? That's a downtrend. And it's always, no matter what time frame you're on, right? Right now we're on a daily, so it's very obvious. But it's always very important to know what the current trend is, right? Where is the market moving? And there's a big saying that you'll hear whenever you do trading, and it's that the trend is your friend. Until the bend at the end, but the trend is your friend, right? So if you're seeing that the market is making a low, a higher high, a higher low, a higher high, right? You're in an uptrend. So this is where you'd be more likely to be looking for upside continuation, right? Because the trend, again, is your friend. Now, trends can change, of course, and that's what we're kind of seeing now, right? We came out of this big downtrend here, and now we're starting to reverse that into an uptrend. Yeah, there is one more, I guess, market condition to be aware of, right? Because we have our bull markets and our bear markets. We've got uptrends and downtrends. But an important thing to keep in mind is that we also get ranging markets, and this is essentially where price will have these long periods of time where it'll trade between 2 points, and you could honestly say they were just barely breaking out of a ranging market, right? So if I were to grab a rectangle here and I can mark off all these lows here, you can see that we have a big box down here, and then if I go to these highs here, you can see I have a big box, and you'll see that it keeps kind of ping-ponging between these two lines, and this is a ranging market, and this is kind of the other condition next to trending that you will see when you trade and when you're in the markets, right? And ranging markets give us actually a lot of opportunity as traders that usually the average investor would not get anything out of it, right? Because if price is moving sideways, for most people that are investing, right, they're not going to benefit unless the price keeps going up, or the price keeps going down, depending on what side they play. But what we can do as traders, right, is we can look to play these bounces, right? So we can catch these moves up here, like 30% up, and then we can catch we're at like the top of the range, so we can get 10% down, and we can go up and down, and we can play these ping pongs, right? We can play these bounces in between our range levels, if you will, in between our support and resistance, which leads nicely into that. Kind of a key concept when we are actually trading, the most important thing, aside from trend, of course, is our support and resistance. So you'll see almost any trader drawing lines on their chart, right? So you've probably seen this if you've been around the block a bit. You'll see people drawing lines on their chart in, well, sometimes might seem weird places, but you can kind of see how these how price or how these candles move when you get to these levels, right? So I drew some boxes there, and you can see how it like moves in between those. And essentially, this is support and resistance, right? So if we're above a line and it has rejected from there a lot. So in this case, we came down here and we made a low, and then actually it bounced off here twice in that same area, right? We've now established this as a support area, right? As a support line. Now, what I've done here is I've drawn this based on, I've drawn a single line here, right? I've grabbed basically a horizontal trend, like a trend line here, and I've dragged it out. But in reality, these are much more boxes, because everyone draws them slightly differently, or there's a few different places in the same area, and you'll get these little areas of support, right? So as we come into those, you can see that we just established this as support by having these couple bounces here, right? And you can actually see, if I zoom in enough, you can see a bit that actually we bounced off here twice. So this was now a resistance level. Now the important thing to note is that once you get above resistance or below support, it flips. So previous resistance becomes support. So you can see in this case, we actually had a resistance here from these highs, but we came above it, and then we came down it, and we bounced off of it, right? And we continued back up. And this is how you'll always see the market moving between lines of support and resistance. So in this case, right, we established this this resistance line here. We bounced off it, and you can see even after that initial bounce, right, it came back to it and it found a little bit of support there. It did fall through it, and these are never perfect, right? And it doesn't have to be, but you can see how these levels do really hold the price up, right? Because we had a couple bounces here, and then you could have known immediately as soon as it was coming into that that it would likely find support. So you can actually see it. Essentially, we immediately had a big bounce coming out of that support again, and we found our footing there after that as well. But you could just see how these previous lines that we found, these previous highs, are relevant even months later, right? Because this was established here in July, and it was still relevant November, right? So it's very useful to plot these out and to know where your support and resistance are, because this all played out even now all the way to February this year, right? And we want to just keep these big lines in mind. And what I would suggest to do is to find really where are the most relevant levels, right? Because you can draw an infinite number of support lines, but you really want to try to find those that are most relevant, right? So in this case, we had this big range, right? So we had big highs here, and we had big lows here. So these are the kind of the relevant levels. This is our greater range, and in that range, we'll have smaller levels, right? When we came down here to 16,000, this became a support level, right? But it's not the main support level of this range, so it's less relevant. So we put our focus on the greater range. Now, that doesn't mean these aren't valid, right? These are very relevant support levels still. But these are what I would call more minor, right? These are like your tier 2 support levels instead of the number ones, if that makes sense. Now, another way we can actually find support and resistance, right? Because now I'm using horizontal zones. I'm using rectangles here in the painting section on TradingView, and I'm dragging these out, and I'm getting my areas of support. But what we can also do is we can use trend lines to find essentially diagonal lines of support or resistance. So what we had here was a pretty good example, and we're actually falling back below it now. But you can see that price was actually constantly hitting its head on the same trend line, right? It basically made this diagonal line up, and it followed it to a T, right? So these can be very useful for finding other lines of resistance. And I think do I have a chart here that has it? I don't think so. Actually, this one does. Right. So I'll have lines all the way from This blue trend line here, this is something I pulled from our highs in November 2021 to our March, April 2022 highs, right? So you can see how I dragged it from that top there to that high there. And that then lined up with where we came down and touched here all the way more than a year later, right? Yeah, well more than a year. So you can see how these lines give us areas to look for. So yeah, these are very useful as well to have on your chart, to have in your arsenal, right? To find where these lines are. And if I zoom in a little bit, if I go to the 4-hour chart, right, still Bitcoin, but it's now every bar is 4 hours instead of a whole day. You can see how it keeps rejecting, right? It keeps coming up into that line and coming back down. It keeps touching it and then pulling back, right? And this rejection, and then we saw here we kept getting this higher high structure, but we actually pulled back. But again, as we said, previous resistance, right? We established this as resistance, this middle box, now becomes support. So if you were seeing this pulling back, you would see it come back down into that 21.7, basically back into our box that we established all the way back from June last year. And you would know this is probably a good buy area. And it was, and I bought a bunch there, right? And that's how simple some of this stuff can be. Actual day trading can be much more complicated, but you could, in theory, have things be this simple, really. But what you also notice is that the greater pullback didn't really come until we got up here, right? And this is where that horizontal line comes in again, because trend lines are very much relevant, but you always want to try to find what we call confluence, right? You want to find where the trend line lines up with the horizontal line. So in this case, what you could see is we established our range highs back in August 2022, right? We have this wick down here. We have these these highs coming into here. And now what do we see? We see when our trend line hit with our range highs, we had confluence, right? That's when we got the bigger rejection. That's when we got a big dump off that actually lost our support for a second. Now, some of you might say, well, this is a lower low now, right? Which it is technically, right? If we're looking on the daily time frame, this would be a lower low, right? Because we put in our original higher low here, right? So this is now our lower low. But what you'll actually see is that this never confirmed a downtrend, right? Because we never made a lower high, right? We continued straight back up and made a new higher high. So our trend is still intact. If instead this were to have made a high, right? That high, and then we get a higher high, and then this became lower, and then we had a lower high. That is what I think many of you would know as a head and shoulders, right? So we got our shoulder, our head, and our shoulder, right? And these are what we call topping patterns. But yeah. To check, in your opinion, what is more weight, horizontals or trend lines? Horizontal lines, 100%. So trend lines, the thing about trend lines is they're very arbitrary, right? And that basically means that there's a million ways to draw a trend line, right? I can draw the trend line here, and I can draw, let's find some other trend lines. I can find one here, right? And I mean, these are definitely relevant. You can definitely use these in trading, right? Because you can see, I mean, we lost this trend line here, we dumped, right? But you can find trend lines everywhere. But the thing is that everyone draws them a little bit differently. So when so that's the thing of it. That's you can do both, and that's why I say horizontal is more relevant than trend lines because everyone draws them slightly differently. So you can use the exact wicks to find them, but you can also use bodies, right? So it's not, trend lines just aren't an exact science. So I just go with what feels right, and that sounds really really annoying, right? Because you can't really do that actually. But if you draw a trend line, right? I mean, this is some bodies, some wicks, but like it can stick out, right? It doesn't have to be perfect because, as I said, everyone draws them slightly differently. So I could draw it like this, or I could draw it like off that one. Now that one didn't work, but I could also draw it off only the bodies, and then that will line up with that wick. So you'll get this whole slew of trend lines that can be correct, right? Um, but it's just kind of getting a feel for it, seeing what lines up. And now, a good way, I guess, to get around this, to think that it's just a single line, would be to use a rotated rectangle. And you can just draw that out as a line and then make it a bit wider. And then you'll get like areas where it makes sense, right? So you can draw it like that. And now this is our support. And now actually, according to this, right, if this trend line was working as our support in this area, right, we flipped it, we came above it, now support. We're now coming below it and retesting it as resistance. So rejection from here would be very bearish for Bitcoin. On top of that, we of course have a bit of a double topping area here. So this is again leading into topping patterns, right? Like the head and shoulders, like I said, where we're seeing price action very much slowing down. And head and shoulders is a very common, well-known topping pattern. The double top is another great example. And you can you'll always see a double top kind of drawn like this, right, where it's just two equal highs. But a double top can also be like this, right, or it can be like this, right? There's slight variation. It's still a double top, and in the end, it doesn't really matter what you call it. What matters is that the formation that it's giving us on our chart. So actually what we're seeing here is, if I get rid of that line, right, because like we can use our trend line to get that action, but we can also see that we actually have some support here, right? So we still have this area here. Actually, of course, let me draw it as a rectangle so it's a bit more accurate, right? So this is a minor level. Again, this is not our major range level yet, but you can basically see from 27,000 to 26,700 we have support. So we actually bounced off of it. Now on our trend line, we would suggest that we are actually rejecting from it there, but as long as we're holding above the horizontal, right, which is again most relevant, as long as we're above the horizontal, we're in the clear, if you will. Now, getting these rejections off trend lines can be a pretty good way to get an earlier entry, if you will. But again, we also have this trend line, right? So we can find these trend lines even in the current price action, even on these lower time frames. You'll find these everywhere. One thing that helps with trend lines is if you draw a trend on one time frame, not micro candles, and the candle closes on the other side. That's more meaningful than a wick going inside of it. Yeah. Yeah. Yeah, what I'll generally do is I'll draw kind of a trend line and I'll just watch how it reacts there, right? And I mean, this was a trend line that I originally drew. I drew the trend line like this back in January when we were getting this move up. And I was basically just lining it up with the highs here, right? I'm trying to get as many touches as possible within that same line. And this goes for support or resistance as well. That's kind of how you get these areas of interest. So you can see I took it from the start of that wick, then a touch here. It's not lined up perfectly, but it touched. then actually clear rejection here. You can see the body closed right below it and then rejected immediately. And then we get another wick slightly above it and then another wick perfectly to it. Now that gives us a great trend line. And then if we extend that, you can go here, style, extend right line. You can actually see how that lines up with our previous action here. So now you can see we actually, that initial move rejected very hard there. Now what we can do is adjust this trend line for more recent price action, right? So we could either move this side up a bit or move it down on the other side just to line it up better with what's going on right now. And that is another very relevant thing to do when you're using support and resistance, is to always remember that to update your support and resistance lines. So you can grab support areas, and I mean Bitcoin charts are not really a great example of that, but you can get support areas from previous times. Actually, this would be one from back in the day that had that worked great, but they're just not relevant anymore. So if we take this high, for example, right, this worked great here. We put in all these highs after our dump here in the summer 2021. We broke above it. We kind of had a retest there. Broke above it, bounced off it as support, right? So we flipped the resistance, and then we had another wick to it and another bounce there. But then what you can see is actually coming into February here, 2022, it just didn't care anymore, right? And this is where you need to adjust your lines, right? Because we always want to look at this from, do I have the symbols here? I don't know. We always want to look at this from right to left, right? We want to focus on recency, right? So if we're seeing that price is just completely ignoring this area like it is here, right? So here it had a bit of a retest, but then as soon as you're seeing this, at that point the level isn't very relevant anymore. So what do? We can just delete that. We grab a new rectangle and we see what does line up, right? So we have these lows and we have these highs, right? So now instead of grabbing our highs from the summer here and the low from our retest, we're grabbing what used to be a very minor level, which was basically our lows here, our minor support, like super minor support during this rally that we broke below and then broke out again, right? We're now taking that. By the way, we'll support here as well. Of course, it's a little bit off. You just adjust it however feels right. But yeah, we can see that we kind of established it here. It wasn't very relevant, but then we're rejecting there, and now we're finding a double top here. And this, again, leads into that topping pattern. Oh, my God. So this is, again, where we're finding a great example of a double top, right? So you get a high, and then you get another high of basically the similar height, and then you reject from it. But now we've basically established a new line of support. And this is now a fantastic place to be looking for shorts again, whereas what we established here with our lows can be a great place to look for longs. And you can see how if you're shorting, if you're putting short orders in this area, right, they paid off great, and then you can close those or buy more here. Yeah, so that's a great way to look at this market. And the thing is, when you start trading, right, and everyone has this, and hell, even I still sometimes get this. This very important mindset thing is every time that price is nearing resistance, you'll start hearing everyone becoming bullish, right? Everyone thinks the price is going to continue up because people think that that whatever is happening now is going to continue, or they'll see like it coming into support, and everyone's always looking for the breakouts, right? So a breakout is when you get these price movements where you lose a support or resistance level, right? And you break out of them, and you can get these explosive rallies, right? So in this case, right, when we established our support line, our resistance line here, we broke above that and immediately did a 30% rally, right? So people are always looking for breakouts. But the fact of the matter is, most of the time, price doesn't break out, right? We had by the way, we have fake outs as well. So you'll have breakouts that fail, right? So in this case, we had one here coming, like taking out our highs just barely and then coming back down. That'll lead us into something else in a minute. But what you can see is we had actually a single breakout, right? Coming down here. This was our real breakout and our only real breakout right at the end, right? But in that meantime, we had, like, say we established, we first had our touch of support here, right? It was support here, retested from it, so this was already an area of interest. Now, we got a high here, and then confirmed this as a double top. This basically means that we had one, or you could even call that two, but that's two touches of resistance, and 1, 2, and 3 touches of support. So that's, if we're not even counting that one, right? If we're being generous here, we had 5 setups, like 5 trades there basically, within that range before we had that one breakout. And this is the big like fallacies. Everyone's always looking for the breakout, right? Everyone's always looking for the next big move. And I mean, even I still do that, right? So I'll see the action we're making now, and I'm looking for shorts because I do think Bitcoin's coming down, right? But I'll be looking for shorts as we're nearing the support. But really, you want to be looking for shorts when you're nearing these highs, right? Because you just have way more to gain. And again, you get one breakout. Most of the time, you get one breakout and many touches of support or resistance. So this is a big mind shift thing. Whenever you see price coming into resistance or see it coming into support, just start looking for plays in the opposite direction, right? And it feels very unnatural to look for price to come down when it's making these big rallies up. But as traders, we're trying to play probability, right? We're not trying to be right all the time. We're trying to just be right enough of the time, and to play, and we do that by playing the probabilities, right? And as we can see here, we got one breakout and 5 tests that held, and now we had one fake out here, but that again leads us into how we would actually play these breakouts, right? So a big thing with support as well that I haven't mentioned is the more touches of a line. So I did tell you, right? Look for the more touches it has, the more relevant it is. But don't mistake that with the more touches, the stronger it is, right? So every single touch, you could think of this as all of these boxes are just where people are buying, right? All of these people are just, all of these boxes you could think are as buyers, right? People are buying support, and that's why it's a big box. This is where people are buying in. But you could think every single time that price comes down into that box, people are getting their buys in. People's orders are getting filled, right? So all of a sudden, every time that it touches here, there's a little less orders, and now by the time you get over here, that might be very few. So we went from having 5 lines there worth of orders to now having a single line worth of orders, and that's when you get those breakdowns. And this is also why when price is grinding up against a level, right? So this is how we look for breakouts, right? In this case, price had a little fake out to the upside, but it came down and it was just grinding against it. Now it was here too, but we were just barely establishing that as support. But regardless, you grind down. We already had many touches here, right? And that's when you get that breakdown. Now, we had a little fake out here, right? So we could say the same thing for the top side, right? That we had orders here and they started getting filled. and now it broke through. Well, if you were buying here, um, it didn't end very well. You know, it didn't go very far, and that's why we look for what we call retests, right? So a lot of the time, and this isn't always, but a lot of the time, when you break a support or resistance line, you will get a retest. So we were seeing that here, where we took out basically these highs, and this one wasn't, you know, perfect, but we saw it here as well, where price breaks a level, right? It breaks a level, but it comes back up, and now what was previously support, right? This was support here. It's now resistance, and we reject from there, and that's what we call a retest. Now this is fantastic confirmation that you are in fact breaking a support or resistance line. Now what you can see here is actually we had a break, and then we came down, and we had a little bit of a bounce, but we never really moved anywhere. And by waiting for these retests, you're getting a much higher probability outcome that you're actually going to be right on these moves. Now, yes, this you could call this a retest. I mean, it's up to, you know, trader discretion. But it would have been very easy to get out of here for a minor loss, right? And as I said, we don't have to be right all the time. We just have to make sure we make more money than we lose. Like, that's trading. So it would have been very easy to get out of here and not lose too much money. And yeah, you'll have moves like this that don't really immediately retest, and there's still ways to get into this, right? I mean, if you're seeing massive nukes through it like that after so many touch, but it's something that comes with experience, or with if you've built a strategy around it, right? But yeah, you can see this. This applies even this long ago, right? We established this originally here, right? But as we were grinding up against it, and now you can draw this box however you want. Like, you could draw it like that, and then it actually encapsulates a bit more. I've drawn it a bit higher because that's how I've chosen to draw it, right? There's a little bit of a thing. I would usually just call this a more minor level, as if I were to, you know, I would call this a bit of a minor level, right? We got a couple of highs there, but it's not our actual range highs, so it's still relevant, but it's not our main highs. But yeah, you can see we actually finally broke above it. Now, again, what I'd be looking for is that retest, right? We've come up a bunch. Now let's see that retest. Let's see that bounce back, and you can actually see that we are making a little bit of a bowl there. You know, we're topping out a little bit. You know, we went from making aggressively higher highs to making slightly higher highs, and then lower highs, and now we're making a lower low, and you can call that a little topping pattern, right? Where price is just slowing down, and eventually you can lose these levels. So now we are grinding up against support. And of course, this is not guaranteed that it's not going to come to the top side, right? But or that it doesn't break out to the top side. It's just right now this looks quite bearish, right? It's a topping pattern. Now this could go and make a massive rally here and then do that and just break out to the top side, but we can then look for breakouts to the top side if that does give us a reason to, but right now probability remains to the downside, in my opinion. Again, this is stuff that as you trade, as you get use charts, and I think this is the biggest takeaway. Like, just go on charts and start charting things and getting opinions on things. Just write them down. Write down what you think is going to happen, and then see what happens. Learn from it, right? The biggest mistake, however, that you can make as a new trader is to not educate yourself before you start trading. And that sounds really annoying because people just want to trade and make money. But it's like, you know, you wouldn't go operate, you wouldn't go into surgery on someone when you didn't first train a whole bunch to become a doctor, right? And trading is difficult, right? I'm trying to make it sound simple and I'm trying to explain the basics, but being a consistently profitable trader is difficult. 99.9% of traders lose money. A lot of them blow up all their whole account, and I'm not an exception, right? I have lost a lot of money in the past. Had a fun little analogy that I put my money where my mouth was, but my mouth didn't know what he was talking about. So please just get familiar with it, get an actual strategy, right? Before you risk all your money, all the money you worked so hard for, right? Get a strategy, and Lendal's fantastic for that, right? Lendal gives you access to actually back tested strategies and to real proper trading strategies that you can actually make use of without needing to be an absolute expert god tier day trader, right? So there's still that. Lendal's a great place to be for that. But I would still encourage everyone to just study a bit, figure out how all this stuff works and get yourself a strategy. And whether that's with Lendal or whether that's with your own thing you figured out or someone you found on YouTube, I wouldn't really recommend that. But there's a lot of ways to go on this journey, but just don't risk it all when you don't really know what you're doing. And I'll basically most traders I hear they don't have this kind of help, right? People who just get into trading on their own, they'll usually take a few years, and it's the same for me. I lost money in trading for my first 2-3 years, and it's been the same for basically most people I know. It takes like 3-4 years to really get consistently profitable if you don't have this kind of guidance or these kind of tools available to you. Yeah, that brings us into some other patterns, right? So I went over the head and shoulders, and we had the double top, right? And these are very relevant patterns. And when you go more advanced, you can find reasons why these would be very useful. An important thing to keep in mind, though, is we can actually invert our chart, right? We can just right-click here, invert, and all of a sudden everything is flipped on its head. And these work the exact same way when you're in a downtrend, right? That's just an inverse double top, right? Or in this case, a double bottom, or a inverse head and shoulders, or a cock and balls, as I call it. It kind of looks like a little chode, but these work the same way, right? Instead of making a higher high, and then a lower high, you're making a low. Oh, fuck's sakes, I do it again. Keep clicking away my thing. You make a lower low, and then a higher low, right? These are still bottoming patterns. And it's the same thing for the double top, now a double bottom, right? So yeah, that's a great thing to keep in mind, right? And now I gave you some patterns, right? The head and shoulders, the double top. There's loads of patterns in trading, right? You can find as many patterns as you want. But what's important is just to get a feel for how markets move. And the only real way you're going to get that is by just being on the charts. So I was able to see that this is actually a bit of a bottoming pattern. Now, this isn't a clean double top. This doesn't really look like a double top, now does it? But you still have that same bottoming action, and that gave me great confidence to just continue buying here. So, I mean, I've been buying Bitcoin since June last year, since we first hit 23K. I've been buying all the way down into here. I've been buying on the dips. I sold a bunch here. I'll be buying more, right? Yeah. Yeah. So here's the thing. Everyone says maintain a strat, don't switch until you test it. But if you can't make it profitable, how do you know when to switch things up? Like how long to grind on one before trying something else? A lot of time can be wasted when you aren't a great trader and you can't tell what's really end up being shit strat versus your own shit execution. That's a great point, Slim, and I absolutely agree. Strategy hopping is not the thing, right? So you'll and when people say this, they are correct, right? So what a lot of new traders, and I've done this as well, of course, don't get me wrong, is they'll strategy hop, right? So they'll one of their strategies isn't working immediately, and they'll just hop onto the next thing, right? Or they'll start doing something else because they get frustrated. And this is where backtesting comes in, right? And backtesting, it's fucking boring. And I've gone over this in some of the more advanced lessons. But essentially, you can go in a spreadsheet, and you can essentially record data of how the strategy performed in the past. Now, I like to get a lot of data because I like numbers, but this can be as simple as taking a strategy and counting up wins versus losses. So say for every, let's just say you have a 1 risk reward, because I haven't gotten into that yet. For every win, you put down a 1, and for every loss, you put down a -1, right? It can be that simple. As long as you have defined what your strategy is. This way, you can literally just say, well, I got so many wins, so many losses, and then you can just sum those all up, and that will tell you if it's profitable. Now, in this case, we got a 2. What does that mean? I don't know. But in this case, it was profitable, right? It can be this simple. Lendal has great backtesting features. It automatically backtests a lot of the strategies, so you can use the Lendal Pro Tester and stuff. Yeah, I like to get all the data because I can optimize my strategies or whatever. So this one I was messing around with. It kind of doesn't work great because of fees. By the way, don't try to just rip these strategies off. Like they're not fucking complete, or they're not perfect. They're not gonna fucking make you a magical trader pill. Just get your thing. But yeah, Lendals is great for that because it does come with built-in backtesting. So if I were to go to Lendal Pro, that's the SR. That's not the one I wanted. If I go, god damn it. Fucking trading view being laggy. I broke it. Let me just go like that. I can probably grab it. And get off that. Of course, I have a bunch of indicators here too. If I go to invite only, Lendal Pro Tester, and this will open up the big box. I believe some people have access to the beta. I'm actually not too familiar. Maybe Claire can shed some light on how people might get beta access if they don't have it, if that's even still open. But yeah, so you'll get access to the whole indicator, and you can have a lot of strategies built with this. But what it'll do is, I'll just apply it for now, is it will open the strategy tester here, and this will tell me exactly how, or roughly how much this would have made. Fantastic, Claire. Yeah, but this will tell you exactly like what the strategy did historically, right? So in this case, this is terrible, right? This is base settings. Yeah, just ping Claire in chat, and apparently you can get access to the beta. But so just at Claire. But yeah, this will tell you the historical profitability rate of whatever strategy you're testing. Now, Lendal has a whole bunch of already created strategies for people to play around with. Now, do note that this isn't perfect, right? The TradingView strategy tester isn't perfect, but it will give you very good, like a very close estimate of what you'd actually make. There's always going to be slight things, and this is going to be for everything, right? Even if you backtest it manually, you're going to have some issues. I personally enjoy backtesting manually. Like you could see with all the numbers I wrote down, I wouldn't do that if I absolutely despised it. I would just simplify it, but yeah. Yeah, for manual trading, I mean, that's what we call forward testing, right? So when you actually start taking the strategy, and essentially, I mean, if it doesn't, if you've taken like 20 trades and it's not performing anything like your back testing results, I mean, I would kind of just see what is going on there. Like if it's not in line with your back testing, I would first try to find the disparity there, right? So if my forward, like my actual taking the trades doesn't go the same, I'd first try to figure out what went wrong versus the strategy, and if it continues to not work after like 20, 25, I would probably, and you can't fix it, right? I would probably just move on at that point. But a big thing, I wouldn't necessarily delete them, because a big thing is if you are using strategies, and this kind of strays from the beginner topic, but when you are building strategies, it's important to know what kind of market condition you're in, right? So we went over trending markets and ranging markets, right? We had downtrends, uptrends, and sideways, but you'll have these time periods, right? Like basically most of October here last year is where very little is happening, right? So you'll have this sideways chop, and this is, for Bitcoin to only move up and down 7%, basically was the kind of the range here for over a month. It can mean that on these lower time frames, there just isn't really much to be traded, right? And that's why a lot of the time your strategies can fail to work. So it's an important thing to do when you are using your strategies, is to make sure you're in the right market condition. So that's the nice thing about I find about like manual backtesting, is I can see exactly what it has to look like, right? I can get a feel for what the strategy looks like when I want to actually take the trade, and I'll know what market conditions it was in for everything I've tested. Now, Lendal, you don't exactly see what the trades look like, but there you get much more flexibility in that you can very easily tweak some numbers or plug in a new strategy. Whereas with manual back testing, you're going to have to just grind that out for hours and hours to either adjust things and you won't get that instant feedback. So there's pros and cons to everything, of course. But yeah, if you do have a strategy that isn't working for like 20 iterations and you can't fix it, right, and it's nothing like the backtested results, I would either first see if it's maybe market conditions, and otherwise I would just throw it on the back burner and maybe I can test it again in the future, right? I had a fantastic strategy that worked great all throughout like basically from May 2022 coming into September. But since then, it's not really worked too much. I mean, it's worked all right during this big run up, but it really just needed a lot of volatility. And now market conditions have just been slightly different, and it's just not been great. So I've been using other things. Yeah, back to the topic at hand, for the beginner topic, I guess. So we went over bottoming and topping patterns, right? Like the head and shoulders, and like the double tops and the double bottoms. Another way we can look at these is, very popular one you'll see is ascending triangles and descending triangles, right? So this is where price will essentially trade like this, and these can also form as bottoming patterns, but you can get these as at the tops as well for continuation, right? So these are a bit more neutral, but generally flat line, right? Flat line at the top with ascending support. That is a ascending triangle, more likely, keyword, more likely to break down to break up to the upside. And then we have the descending triangle, which is more likely to break down, right? So you might get a little something like that, and then it just comes down, right? More likely, again, and this comes from, I mean, we went over the fact, right? You have at resistance, you get all these little orders, right? So people are selling here, and every time we hit that, we're taking a few of those orders away, right? So that resistance gets weaker, and then you break out to the top side. Whereas on the bottom, right, we have a trend line, but we're not basing it off of a single horizontal level. So we have more orders spread out on the bottom side to keep us up, if that makes sense. So we're not constantly hitting the same area, making it weaker and weaker. Now, of course, nothing has to happen, but yeah, these are like I think 70% to break down to like a descending triangles, 70%. Same thing for the ascending. I think it's about 70% that they break to their respective sides. There is a slightly less popular, but in my opinion, better variation of this, one that I like better, and that is the right-angled broadening descending wedge or something. The name is way too long, but I found it through my friend BTCJ. So I just call it the J pattern. And it's essentially, this is a very strong bottoming or topping pattern, where in this case, we'd be looking at a bottoming. So let me make these green because I think it's bullish. And essentially what we're seeing is we would see price come down into this and then trade down, and then we get the breakout. And then some people will take measured moves. So we'll take like from where we established our pattern and then put that on the breakout. And that would be like our target there. But I don't really care too much for measured moves. I'm generally just looking at the pattern and what direction, and I'll look for actual targets based on support or resistance where it's likely to trade to. But yeah, and this works on the other side as well. And let me actually draw this out right here on price action where we had it. Right, so we had this big central level, and I can kind of just delete some of these. We have this big central level here, right? And now we made this diagonal line up, right? But we have this flat support, which is just the inverse of what we had here, right? So now we're actually seeing that exact pattern, but inverted. So if I actually flip the chart here again, if I invert the scale, you can actually see exactly how that played out. Now, in this case, we did actually get a little bit of a breakout, but again, this was a fake out. It did play out to the downside, right? But it didn't go as far as one might look for. Granted, I still got in there, but you know. But yeah, this is a pattern like that playing out in real time. Now, you might ask why I like that better. And that is because when you have slightly higher highs or slightly higher lows, or lower lows, sorry, when you get these weak trends coming up against that is you will find a lot of divergences, and divergences is maybe a bit too complex to be getting into right now, especially considering time constraints. But these are essentially indicators. You will find these on a lot of indicators that will give us further reason to suspect downside. So I personally like them a bit more. I personally like the J pattern, the right angled broadening, descending or ascending wedgie, right? So like that, or you know, the bullish one is like that. And these are, I look for these specifically as topping patterns, right? So, or bottoming, right? So on the ascending or descending, you might see those like at the top as a continuation, but these are purely bottoming or topping patterns for me. Like if we get kind of a big move up, like if we were to do this and then get this, I wouldn't care as much for it. But yeah. But those are my really my main bottoming patterns, right? These are all the patterns I might use for a bottom, and then we have one thing left for patterns, one category, and that is triangles and wedges and flags, I guess. And these are basically anytime price action trades either in a symmetrical triangle, and these are neutral patterns, but you can still trade them because you can look for the break on either side to get to catch a move, right? So you can build a strategy around catching moves on these patterns if you like being a pattern trader, right? So you can play either side on the symmetrical ones, or you'll have actually, I guess that's also a bottoming or topping pattern, is you'll have price action coming up, and it'll be making a bit of a wedge. Now I'm drawing shit. So it'll be like that. Let's do it like that. Yeah, great. So you'll have, let's just draw it like that. Sure. So this would be a rising wedge, or a rising pizza, or whatever you want to call it, or you have it to the downside, and these are actually inverted targets, and this is for the same reason as I was talking about with those patterns, is the divergences, right? So when price trades down into one of these, you're looking to break out to the top side more likely. So I actually painted this in wrong color. You are looking for these to more likely break to the top side, because again, you're working up all those divergences on these slightly lower lows. I am streaming, so I am drawing. Maybe your stream's frozen, Jag. Looks fine on my my monitors and stuff. Yeah, these usually play out to the downside, and again, this comes from those divergences that I mentioned, and I'll go over those again in a future stream. Maybe try to restart the stream, Jack. Like just stop watching and then rewatch it. That might help. Yeah, so these are the rising and the falling wedges, and these are reversal patterns. So you'll have these slightly higher highs, and then you'll get the move down most likely, or for these you'll get the move up most likely, right? Again, most likely doesn't have to happen, but these are again coming in from those divergences. Now we have one more that I'm a big fan of, or that I like using, and that is flags. So essentially we'll get these big vertical rallies, almost just very strong rallies or very strong dumps, right? Works both ways. And then you'll get essentially a little flag at the end. So price will get a big rally up along here, and then it'll just trade slightly sideways and down, and that's when you're looking for that break back up. And this is one where I do feel inclined to use the measured move. So you can take essentially the mast of the flag, if you will, the original vertical rally, and you can paste that on top of there, and that's oftentimes where you'll find a good target for that move. Let me not delete that. So those are flags, and a good example of that right here on the chart. Let me get rid of some of these. It's not very relevant right now. This is a very good example, and this is on a massive time frame, right? So this would be our pole, right? We get a very strong rally move down, and then we get a flag. And now this, it doesn't have to be perfect symmetrical lines, right? But this is very much a bear flag, right? If I were to invert the chart, you'll see it actually looks exactly basically like what we drew there, but just inverted, right? So it's just flipped on its head. And now what do? We take that stick and we put it where we broke down, and you can see it was very close. Now, of course, these aren't perfect. These are subject to user error or to how you draw them, right? So I like, you could draw them from the wick high to the wick low, and then that's how you get your mast, and then that gives you a certain target, which was actually more accurate in this case. But there's a bit of user error, so I always tend to be on the more cautious side there, and try to be a bit less greedy and assume it's a smaller move for those kind of targets. But this is a massive example. But this, you can do this on a daily, or like this would be a weekly time frame, right? You can kind of see how this is more a weekly time frame, right? So each candle represents a single week, and you can see how that kind of played out, right? If I inverted there, so this on a weekly, right? But you can play this on a daily. You can play this on a hourly, right? Every single candle is 1 hour. You can play this on a 15-minute chart, right? You still work. By the way, this is another great example of that right angle broadening, descending J pattern, whatever you want to call it, right? Establish single line of resistance, chop down into it, and then big rally coming out of it. Great bottoming pattern. But yeah, that was a great example of a J pattern. Yes, exactly. Where we say J like that because this is his name. He's claimed it. Obscure pattern. He's going to popularize it, name it after himself, even though someone else invented it. True human fashion. But so that's a textbook bull flag or bear flag, right? Now, what we'll also see is sometimes we'll just have this, right? Is we'll get these, what you could call this a bear flag or a bull flag or whatever. But it's kind of just straight, and these are kind of rectangles, but these work in much the same way, right? Exactly, he owns that pattern now. But yeah, it's exactly it functions in very much the same way. I mean, it's not as consistent maybe as a classic bull flag or bear flag, but it serves the same purpose, right? You get a bit of consolidation and then you get continuation. Now this is, in this case, it's a rectangle, but you can also see moves like this where you get a very strong dump. So if I were to draw this, right, you get a very strong dump into a symmetrical triangle. So in this case, make everything red. It's scary, it's going down, oh no. But yeah, this is where it's more likely to continue down, and this again leads into trend, because the trend is your friend until the bend at the end. And a symmetrical triangle, right, just two equal lines like that, a equal triangle or a wedge or whatever you want to call it, it's not particularly a strong reversal pattern, right? We'd more be looking for something like this, where you're chopping up into those highs for downside reversal, right? That's what we saw here, right? This was slightly higher highs, and then we broke down, right? Also kind of J-band, but don't worry about it. So you're getting those slightly higher highs, and if I were to draw this on here, you would see very much that's a rising pizza, right? Rising wedge, whatever. Most likely breaks down again. It's just the slightly higher highs, and you get the breakdown, right? That's a great example of that. But that's if we saw that in the opposite direction, right? If we were to actually, instead of seeing this big rally and then the chop, instead of that we saw this, and then we got a falling pizza, right? Price started chopping in between here. That's actually more likely to be a real reversal. But even then, I usually do want to look for a double bottom, or you look for an inverted head and shoulders, a little cock and ball, right? Those are more consistent. Yeah, they like a symmetrical triangle usually is not a bottoming pattern, so we look at it for continuation, right? So we treat it very similarly to a bearish rectangle, right? Or a bear flag, or whatever you want to use, but it's essentially just a dump and then consolidation, right? And this, again, I've been going over a lot of patterns, but you don't have to perfectly draw these patterns. You just have to get kind of the concept that a dump and then consolidation is more likely to continue down. A dump and then a slight retrace is more likely to continue down. Now, a dump and then sideways and down, right? Slight chop down, that's more likely to come up, right? So this would actually be bullish, or at least more indicative of a real bounce, right? Because here we are getting closer to forming a real bottoming pattern, whereas every time that we get these little bounces, right, we're still just stair stepping down, because the market, right, that's a good thing to know. The market doesn't move in a straight line, you know. It moves like grandma falling down the stairs, you know. It hits every step. It's like a drunken man walking down the street, you know. It's not going to go in a straight line. It's going to zigzag all over the place, and getting these getting this move up is essentially just loading the boat for new sellers, right? So this is kind of a important thing to keep in mind. Just a general thing to hammer into your mind is that when you get these dumps and you get sideways and down, it's more likely to continue up, which is very unnatural when you first get into things, because if it's going down, why would it suddenly go up? Yeah, exactly. Yeah. We want healthy price action, and healthy price action moves like a drunken man, right? And in this case, this also shows us support and resistance again, because we can actually see stair stepping like this. If we just draw it, now you're very rarely going to see this perfectly, but you'd essentially be taking all of these previous highs as support. So these are potential bounce regions. And then when you come down and you make yourself a head and shoulders, this becomes your neckline. Let's pull that out. This becomes your neckline. You fall below that, previous support, now resistance, getting rejected as a retest, right? Now resistance, right? So you reject there, and that's when you come down, and now we're back at the previous level. And now it can figure out if it wants to bounce there or not. But again, support, more likely to hold than not, so we'd be more inclined to look for bounces in that area. Now, of course, this is important to keep in mind with your time frame, right? If I'm on a daily time frame looking at a massive topping pattern, I can look for general trend to be my friend and to take me maybe way further down, but you can still play the opposite side on lower time frames, right? So if I'm looking for a big move down here, right? I could be loading shorts all the way like in the top here, right? Because I think it's going to come down because it's a big topping pattern on the daily, and I have all these reasons to believe that it's coming down, right? Whatever. I can be looking to basically be selling here. I can be shorting, right? Betting that the price goes down. And then I can still go on a lower time frame, and I can expect that it holds support for the time being. So I could go to it. I could be, based on the daily, be selling here, but then actually on an hourly time frame, I can see we just had, what is that? A big dump and sideways and down coming into our support. That's confluence, right? Multiple factors coming together to give me a bullish thesis for the short term, right? The daily, that's a higher time frame idea where I think it's going to go down. But for the short term, it could very easily go up here. So what do we see? We actually see a 2% rally. Now, 2% isn't nearly as much as we try to get percentage-wise on sells there, right? We'd be looking for back to that high that's 12%, or all the way back down that's 34%, right? But these are still trades you could take regardless. And leverage actually lets you balance that out, that those trade sizes could be the exact same. Granted, I don't really have time to go into leverage right now. I think I've gone into quite a lot here with candles, support, resistance, market structure. Yeah, I'd say let some of this sink in. I hope some of you took notes. And otherwise, just try to look some of these things up, and I'll have the the recording if uploaded soon enough in case anyone needs to watch it back. But yeah, just hammer these into your skull. These are kind of just the basics of trading, the basic concepts that I think everyone should know, right? Even if you're not going to be a pattern trader, it's always good to be able to tell what is going on. And mostly it's just having these core concepts of, okay, we're chopping up into resistance. We're not really getting bigger highs, right? You want to see high and then hold previous high as support, right? That would be textbook for a strong uptrend, or not even make it back to previous support. But yeah, whatever. But getting these slightly higher highs, right? You're getting very likely a move back down. It's not strong trending, so we try to play the inverse, and we try to find where might be our resistance. Where do we find confluence, or where might it break down from? And then we see, oh, we got a little wick there. We might draw some resistance from there, and then, oh, wow, would you look at that? It touched the line, it tapped supply, and it just absolutely got wrecked. This is an ascending pizza, ascending wedge, rising wedge, whatever you want to call it. I try to call it rising because people get confused with ascending triangle, which is a bullish pattern, right? This one, the ascending triangle, right? This is bullish. This is the bullish pattern. This is a bearish pattern, right? This is the rising wedge. This is the ascending triangle. I will just generally end up calling these pizzas because they're kind of just pizza slices. But again, we look for that confluence, right? We have a previous wick low here that we can count as a bit of a potential area, right? We wouldn't know yet if this is resistance, right? It could just only consider 28.5. That's a much more relevant level, right? That's where we're rejecting right now. But what we can actually see is that we had a wick there. Like during the day, we went there for a little bit, and then we absolutely just shat the bed. And then we're still in this only slightly higher high structure, right? We're making a rising wedge, a rising pizza. So now we all of a sudden have a rejection from what would be a resistance level, a potential resistance level now confirmed. And we absolutely nuke from there. By the way, I drew my for like reference for easiness, I drew like my retests very cleanly, and you do see some of those, right, where you get chop, 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 you break, you retest, you go down. This is technically also a retest, right? And this is not perfect, but this is technically also a retest. And this is also what we would call a high test, right? When we see candles making a wick, say at the top side here for a downtrend, we see this top side wick that's basically twice the size of the body, right? Now this isn't a perfect one because it has a big body, but generally when you just see a big wick on the top side, no real wick on the bottom, and you're starting a downtrend, you're in a downtrend, right? These are great continuation signals, right? So this one as well, right here, we did have a minor little rally, but what did we just learn? That these small pullbacks within downtrends are really just bear flags, and they're looking to get smacked down even further. So yeah, these are great things to look, because this basically tells us that price tried to move up here, right? It tried to come back up, and it was just hard rejected, right? Because it could not stay at that price, so we get this big wick on the top. So, so this is like, these are great examples, and that's why it functions as a retest. Usually I do want to see, a clean, you get support, a resistance line, you break below it, and I want to see clean, like proper price action doing that. But this works in a much similar way, where we are confirming that it would be rejection, what would it look like to invalidate the flag? It would need to cross back above that trend line. Yeah, so if we were to fake out from the line, right, this big wick would have basically closed as a big green candle, right, rather than a wick, right? So we'd have a big green candle here, or purple, based on my color scheme, but you have a big green candle, and then we trade back up, and now we basically rejected from what would be a support line, but we'd actually want to look, because yeah, you're right, it's probabilities, right? These isn't guaranteed to break down, it's just most likely. But probability, like we would be looking for like a strong break from the previous highs and then hold those as support, right? We don't want to see this continuation of that trend, right? We don't want to see it just making slightly higher highs, because then the pattern would still be valid, right? It gets invalidated when you get a big, strong, girthy move back up and then you hold previous highs as support, because at this point you've broken out of the pattern, right? You've broken out of the pattern. And you can also see this as, again, a retest. Now, again, it's not always going to retest, but this is the easy way to enter, or the safe way. So when you hold those previous highs, you're now basing this off a horizontal support. The pattern has been broken, and it didn't break down. So it broke to the upside, and that's where we'd be looking to invalidate that, basically. Yeah, this is what it'd look like if we just ignore all of this. Like, if we were to get a break to the upside, this is what you'd look for, right? You'd look for the pattern to no longer hold shape. And with moves like this, right, where you do get these very slightly higher highs every time, right, you establish that's not good. You don't want to see that. You want to see big, strong moves holding previous highs. You basically want to start seeing big, strong moves holding previous highs. It's that simple, right? You want to break this pattern, and I'm not even talking about the actual chart pattern. I'm talking about the pattern that it's creating in constantly just making a slightly higher high. Right, you want to get that big, juicy break above there, and that's when you invalidate these kinds of patterns. And I mean, it's that, like I mentioned that these are mostly bullish, right? Or I would be mostly looking for them in a retracement contracts, but we would be saying these mostly bullish. But yeah, if you get a breakdown like that, that invalidates your theory at this point, right? You're essentially saying, well, I've got a low, a higher low, a higher low, and now you've got equal highs, right, which are constantly chipping away at that resistance as we established. But now you've got a lower low and a lower high. So at this point, it becomes bearish, and you start invalidating that. Now, how do we confirm it's a fake out? Well, we got to move back above there, and then all of a sudden this is no longer a lower high, and we did not establish a downtrend because we've only had a lower low, but we haven't had a lower high, right? And you need both to start a new trend. And that's how you can get moves like this to happen, where we actually establish a big low. And I went over this earlier as well, but we establish a low, and then we make a lower low, but we still continue all the way up, right? And that's why it's important to get those lower low confirmations. And this, I mean, this is explaining what's happening here is maybe a bit too out of depth for what we're doing right now, because this is manipulation by whales, and it's kind of the, you could explain it as a fake out as well, but it's generally manipulation. But yeah, we're unless people have questions, I think I've basically gone over all the stuff I wanted to. We went over patterns, we went over support and resistance, basic candles. Oh right, there was one last candle. So I mentioned the big wicks with the big wicks at the top with the smaller body, right? That those are bearish continuation, right? Like if you're looking in it for a bear trend, and the inverted for an uptrend, right? And you're specifically looking for these high-low tests, right? So you're looking for this, right? you see this candle has a very small body, but if we actually measure it, it has a very big wick. So what you can see is the wick is 1.24%, whereas the body here is actually only like 0.26%. There's not much of a wick on top, right? This is a great low test, and we saw a bounce come out of that. Now, how you play this as a strategy, it's up to you. This would be a high test. This would be a low test, and you can see it found a bottom pretty close to that. What you're not necessarily looking for, like you get this big wick here, but the body is basically the same size. I would not really call that a low test. This, however, is technically a high test. That just barely got taken out, and then you get the reversal. Now, when we're looking at high and low tests, you'll see a lot of them on the inverted. So we'll see a lot of low tests here in a downtrend. Now, if you're going to get bullish based on these low tests in a downtrend, it's not going to work out too well. But if you actually do the opposite, where you're looking for only the ones that are matching your trend. So if you establish a downtrend, right? We're downtrending here, right? So we're only going to be looking for high tests. And if we're in an uptrend, we're only going to be looking for low tests, right? Because this just means that there was too much sell pressure, and it forced the price back down, and it couldn't close higher. Whereas a wick on the bottom suggests there was too much buying, and they forced the price back up, right? But if we're playing along with the trend, you get much better results, because you're going to get less of these. Now, of course, you're going to have exceptions like this one here. I mean, you're technically downtrending here. Again, that's just how you define it. But that is a great thing to be looking for as further confluence for continuation of your trend or reversal or whatever. Again, these are just tools to end up building help you build a strategy in the long run. Do they have a name? It's just low and high tests. People will call them hammers, and they'll have fancy names. Just treat them as high and low tests, right? Like you can give them whatever name you want, but realistically, that's just marketing. It just, you need to ideally you just want to understand the concept behind it, right? Having big buyers coming in here, and then all of a sudden they get nuked down, like they couldn't keep it up. That's a great signal, right, for downtrend, and vice versa. And then there was one other candle, and that is bullish and bearish engulfing, and this does have a fancy name, yeah. And this is essentially where you make a little candle, right? We got a little candle here. Yeah, so yeah, Slim, you can find them as shooting stars or morning or evening. I think it's shooting stars, hammers, dragonflies, or whatever. It's way too many names, and honestly, it does not matter too much. You just want to see high tests in a downtrend and low tests in an uptrend. Yeah, you could just look for hammers or for shooting stars or dragonflies. But yeah, the core concept is just look for high tests in a downtrend, low tests in an uptrend. Yeah, bullish engulfing would basically be, say we're trending down here, right? We're in a bit of a downtrend. I'm just going to make these circular because I can't draw for shit. We're downtrending, right? Yeah. Beautiful downtrend. Now, all of a sudden, a big green dildo appears. Candle appears. PG, yeah. And ideally, actually, you don't want to see too much in terms of wicks. And this takes out previous candles. So in this case, it didn't quite get all of them, but you can see that actually it was a single candle just closed way above all of those. And what does that actually look like on a chart? Let's see if we can find one. You could technically call these bearish engulfing, these big nukes, but yeah, I guess this would be a better example if we're looking on inverted. So this would technically be a bullish engulfing now that I've inverted it. It's a bit red, but you get this, get a few candles, and then you get a big candle in the other direction. So yeah, this is bearish engulfing on the proper chart. And let's see if we can find one. Here, this is a great example, right? So here we're coming into a high, right? And we're essentially engulfing that previous candle. We're closing in a single candle below that, and then this tops off with a bit of a high test there, right? That's nice. These are great candles to look for, and I use them I use engulfing in really mostly one of my strategies, but they're great for if you're trying to look for bounces. So I have a strategy based on finding a specific bounce, and getting engulfing candles is a great way to confirm that a support was held or not, right? Because you want it to reject from your support or resistance level. So if we have we establish a support, we come above it, right? So this is now our support area, right? Previous high. We're coming down into this, and now we're chopping around here, and we have a few candles, say, in this area, and then all of a sudden we get a big green candle coming in, and it engulfs that previous action there. Let me move this down. Does that make sense? This little red blob, these are previous candles. It engulfs those, and this confirms that it held our little engulfing candle, and that would mark an entry, for example. Yeah. I think next week I will actually get into entries and exits and how we're actually trading these, rather than just introducing them, because we've been going for almost 2 hours here. Yeah. With that, I have actually gone over all the things I wanted to go over. So if anyone has any questions.
What time frame and time zone do you like to trade on?
So crypto, I just trade crypto personally. So the time zone doesn't really matter, right? Crypto's 24/7. For Forex and maybe for the stock market, I guess for stock market it doesn't matter because it's just US and there's one time zone. But for Forex, I know time zones can matter. I don't personally day trade Forex, so it doesn't matter too much. But time frames, I will honestly trade anything. It's just the types of trades I'll be taking based on the time frame, right? I mostly take my trades around the 15-minute time frame, right? This is where I can, for myself, I can find a decent few setups. I could probably find a couple setups every day that I can take, and it works great for my strategies to give me enough trades. But if I'm looking, I'll also trade based on a daily, right? I think on the daily time frame, we are most likely coming down here. So I can be looking for short positions based on a daily time frame while still taking my lower time frame trades. The important thing is it doesn't matter what time frame you trade. It matters how your life works. Make it work for you, if you work a 9-to-5 job, you can still trade, but just trade based on a 4-hour or higher, right? Don't go day trading because you can't watch it all day. So if you go on a daily time frame, right, there's only one candle close every day. So if you're trading based on a daily, you only really need to look at it once, maybe twice. You could set some alerts just in case, but in general, right, if you work a 9-to-5, you can trade based on a daily or a 4-hour or 12-hour, or maybe even a higher time frame. But if you sit at home all day and you have nothing to do, and you really want to learn trading as fast as possible, go to a 15-minute, right? Go to the hourly. You'll get way more setups, and you can look for lots of different places to find these trades. Right? What matters is how it works for you, because technical analysis is the same on any time frame, right? The concepts remain the same, right? We have a pattern here with divergences. It plays out to the downside. We actually get a fake out. It gets a big pump up. We're now topping out a little bit. We could see this come down, right? You'll see the exact same stuff happening on the 15 minute. It just happens a lot quicker, right? You'll just get a lot more. And yes, you will often end up getting a bit more choppiness here on the lower time frames, right? So I find that higher time frames are easier to trade. There's less noise, if that makes sense. But technical analysis still applies, right? If we are looking at this, this is a different chart I have here, but yeah, if we're looking at this, right, we have our main range. We have a bit of a more minor level, so let me mark that out again. This is our minor level. Now, we came into our range lows. We're trading sideways and down into support. We get a rally, and now we're at a more minor middle of the line resistance level, and we're kind of rejecting from there. Yeah, you can trade this on any time frame, right? It still works the same as it did on the daily or on the weekly. Hell, you can even chart monthly time frames. Most things in crypto can't really chart monthly, but for a good example here, actually, this is me using a pattern on the euro. But yeah, I basically drew a big falling wedge here, took a trend line from our lows here, lined it up with that, and I basically, when we faked out here in November 2021, right, I basically started getting all my payouts, like anything I was paid for jobs. I do work freelance on the side. I was taking it in dollars. I had virtually no euros, and this is as a Dutch citizen, so I basically had no euros, even though I live in Europe. And I just stayed in dollars the whole time, and this came down. And then we came exactly to my 96, 97 area that I was looking for with this trend line. And I got back into euros. Now, granted, I didn't get everything back into euros, but it had a massive rally from there. And this basically just gave me an extra 15% buying power just by being in dollars for a while and then getting back into euros. So this is on a monthly time frame, right? Each one of these is a single month, so this takes forever. But it's very simple trading, right? And now you could have traded this on a weekly too. I was actually in euros here for a bit, but with the whole Binance shenanigans going on around now, I actually had to take profit on some of my euros because this is a way I was easily trading in between them. So I don't trade Forex specifically, but I do keep an eye on this chart. And Binance was the exchange that I had that let me own euros without having to on and off ramp at the banks. But yeah, like I said, TA can be done at any time, right? So I can draw my support and resistance, and you can see how it respects it. I can draw my trend lines, and you can see how it respects it. And this is it goes from a monthly to a 5-minute chart, right? The only reason I don't recommend trading anything lower than 15-minute for 99% of people, or even more than that, is because not only is there a lot of noise on the lower time frames that can get you kind of lost in what's really happening, there's also the fact that you got to take fees into account, right? If you're trading, you're always going to encounter fees, and on these really low time frames, at least in crypto, if you're trading a 1 minute or a 5 minute, the moves are so small that most of your gains are going to get eaten up by your fees, and your losses are just going to be much greater because like the fees are a greater percentage of what you'd actually be making or losing.
Is there a specific coin that you like to trade like most frequently, like Bitcoin or Ethereum?
So I'll trade. I only trade Bitcoin based on my spot bags. For some reason, every time I trade Bitcoin, I don't know if I'm cursed or something, but every time I take a trade on Bitcoin, it doesn't work out. But Ethereum and Matic, I like a lot, and a lot of the time I will just go to random shit coins. So I'll just try to find a random coin that is trading a bit different from the rest of the market, and I'll try to look for trades on that. Yeah, for some reason, if I try to day trade Bitcoin, it always goes wrong, so I just don't. But Uh, I trade this a lot on spot, right? And that's essentially how I'm making swing trades. I'm buying, right? I told you I'm buying all the way here since 23K first hit in June, 23, 22K. I was buying throughout here. I was selling here, right? So that's let's average that. That's the 20%. Granted, I never close my full position because that's risky to do with spot when I'm buying for the long term. But then, yeah, we were coming into support, so I'm buying here again, and then I was buying some more here, and now we had this rally. I actually took some profit here because we were still in a bear market, lower lows, lower highs, so I took some profit. Saw that we actually came back above it, bought back in on the breakout on the lower time frame in this case, but was selling throughout here, bought a lot back when we held the 21.5 support. This was a buy. Let me actually mark these off properly. So this was a buy. Greens are buys, reds are sells. Took some more profit here, coming into that same highs, right? And then bought a lot back on that candle. And this is, again, leads into kind of bullish engulfing, right? Now, I was playing this on the lower time frame. I had a great trade setup, but we get a big wick on the bottom, buying pressure, bullish engulfing right after it. So even on a daily time frame, you could have caught this, bought a lot back here, and now took profit throughout this area. So I still have the majority of my Bitcoin, but every time I'm trading these little moves, essentially as swing trades. So I'm like, I basically got 30% more Bitcoin down here, and I basically sold all of that for 40-50% profit. And
that's a really, really good strategy.
Yeah, and it's just playing, like, you can catch these smaller moves or within the greater thing. And honestly, I don't, again, this leads into learn how to trade first before putting your money where your mouth is, because you don't know what you're talking about. It takes time to learn, right? And it takes actually trading to learn. So what I will recommend to people is, people will tell you to paper trade, which basically means either write down what you're trading without putting any money on it, or getting a paper account, which is basically just a account with an exchange with monopoly money. Personally, I didn't want to do it. I didn't like that. I actually ended up blowing up a bunch of money before really learning how to trade. That was my kind of oh shit moment. But I prefer y'all don't do that, because then you're digging yourself a hole to get out of, which is not great. Trust me.
Already done.
But what I do just tell people is, if you've got a lot of money, if you can miss it, just get $100 and just start trading with it, right? Collect your knowledge and get a strategy and test that, right? And that sounds very vague right now. I have some videos from previous live streams where I've gone over this, but find something that seems to work in the past and try to apply that, and just trade with that $100. If it goes to zero, it goes to zero. It is what it is, right? That's why you're trading with $100 and not your entire net worth. And if you find something that works, great, and you can work your way up, right? If you can turn that 100 into 200 without just playing double or nothing, right? If you can, over the course of a few months, consistently be profitable, start adding little by little what you'd actually use as your trading capital. So say you have say you want to end up trading with $10,000 or whatever, right? You're going to start with that $100, and you're successfully trading that $100 over, like, say 3 months. It's now $250, but you're just adding a couple $100 at a time, or to progressively desensitize yourself. Because the biggest killer of traders is emotion, right? Because I laid this all out very simply today, or at least I tried to, right? Make it seem very black and white. But in reality, the hardest part of trading is not technical analysis. It is not knowing what price is most likely to do. It's executing on that. And this is the problem with humans, is we're very emotional, so we make bad decisions. And this is why I think it's very important to have a strategy that you wrote down, that is clearly defined, because if you can just follow the rules, that's how you get profitable consistently, right? You don't have to work against yourself. Where was it going with this? But yeah, find something that is that you think is likely to work, and it could be something as simple as playing the range. Like you identify resistance, you identify support, and when it gets to resistance, you look for you have X condition to enter a short, and X condition to get the fuck out if it goes too far against you or whatever, right? Stop loss, we'll get into that another time. But just find something that works, and just trade with it. Again, with $100, work that up. If you can be profitable with $100, this is a percentage game. If you can be profitable with 100, eventually you can be profitable with that 10,000. But just work your way up there, because once you start, like, losing $1 doesn't matter to you, right? But if you are trading with 10,000, right? So that's all the money you want to trade with. That $1 move is now all of a sudden a $100 move, right? If you lost $100, all of a sudden you now lost. If you lost $1 previously on that $100 account, that's the same as losing $100 on 10,000, right? And that fucks with people's heads, and they start deviating from strategies, and they start thinking it doesn't work. And that's why you work your way up. So you start with that 100, you become profitable with that first, then you go up to 1,000 maybe, right? And you become profitable, you get used to that. You get used to losing $10 for every dollar you used to lose. And it's not about the gains, right? How much you make, it doesn't matter. It's just like losses are going to impact you so much more. So it's about keeping those losses low, and you just want to win at the end of the day, right? But you work your way up, and you go from 1,000 to 2,000 to 5,000 to eventually 10,000. But you have to give it time, because if you go from trading with 100 to trading with 10,000, I can almost guarantee you will fuck it up. And with that, I will leave you all to it, unless there is any more questions. That is exactly right, the Jag. You need to focus for steady wins and not home runs. Like, trading is not about home runs. Trading is about small and consistent gains and compounding profit. I guess that's the last thing I'll pull up here. It's a little exponential growth calculator, right? If you get, say we have $10,000, right? We get 100%. You know, we hit a home run, right? We get 100% on our account, right? We now have $20,000, right? But instead, if you rather than doing something super hard like doubling your account without playing gambling, basically, say you get 10 times 10%, right? Much more manageable. I mean, 10% is still kind of high, but all of a sudden you have 26,000, right? I'd much rather have 26,000 than 20,000. And you're telling me it's easier? That's kind of what I'm getting at here, right? If usually you'll see, I'm usually personally looking for no more than 3% that I'd be risking of my account on a trade, and I'll be looking to make double that, right? 5 to 6%. So if I'm making 5%, 20 times, right? 20 trades that I win at 5% on my account, I have a little bit more. But like, this compounds, right? If I do this 100 times, I went from 10,000 to 1.3 million. So this is kind of what I'm getting at, right? It's not about that compounding, because 500%, I mean, 1.3 million or 60K. You tell me. But that's what I'll leave y'all with. Have a fantastic rest of your day, evening, whatever. And I'll see y'all later.